Welcome to the DebtCircle podcast. Today is June 1st, 2026, and we've got key updates shaping India's economy and markets.
We'll cover forex reserves, RBI policy, banking trends, bond markets, digital currency, and major corporate developments.
India's forex reserves dropped by $7.50 billion to around $614 billion due to RBI intervention, gold losses, and global uncertainty.
A weaker rupee and external volatility continue to pressure reserves, though RBI remains active in stabilizing the currency.
Central Bank of India announced an interim dividend of nearly 485 crore, reflecting strong profitability and steady business growth.
Strong deposits and customer growth continue supporting public sector banks despite margin pressures.
The RBI projects India's GDP growth at 6.9% for FY27, even as risks from West Asia and crude oil prices remain elevated.
Inflation remains a concern, but strong domestic demand and fiscal discipline continue supporting growth momentum.
Bond yields are rising, with the 10-year government bond crossing 7%, driven by inflation fears and higher borrowing needs.
Higher crude prices and geopolitical tensions are making investors cautious, increasing borrowing costs across sectors.
The rupee recently strengthened sharply after crude oil prices cooled and RBI intervened in currency markets.
Still, forex reserves remain under pressure, making currency management a critical focus area.
Regulators like RBI, IDI, and SEBI have accelerated efforts to recover unclaimed deposits, insurance, and mutual fund assets.
Digital platforms are making it easier for citizens to trace forgotten money and claim dormant assets.
RBI penalties on regulated entities fell significantly this year, suggesting better compliance across the financial sector.
Though enforcement remains strict, regulators appear more selective and focused on risk-based monitoring.
India's banking system saw deposit rates fall while loan rates stayed elevated, helping banks protect profitability.
However, borrowers may still feel pressure as monetary easing hasn't fully translated into cheaper loans.
RBI is also expanding the e-rupee pilot for retail payments, government transfers, and even cross-border transactions.
This could significantly improve payment efficiency while strengthening India's digital currency ecosystem.
Infrastructure and renewable energy remain in focus, with major investments announced in solar, battery storage, ports, and transmission networks.
These projects support India's long-term growth ambitions and clean energy transition.
Debt markets remain volatile due to crude oil prices, rupee weakness, and global geopolitical concerns.
Experts currently prefer shorter duration debt strategies while staying cautious on long-term bonds.
That's all for today on the DebtCircle podcast. Stay informed, stay invested, and we'll see you in the next episode.